What's going on, everybody? In today's video, we're going to be covering earnings season with mega cap tech companies coming up this week. We'll look at some important economic data like the FOMC meeting and non-farm payrolls. We'll look at the January effect and where we go from here. We'll look at last week's setup, see if we made any money or not. And we'll look at some new setups we've got this week as well. Companies like Applied Materials, Carnival Cruise Lines, DraftKings, and a couple of more. So, by the way, make sure you smash that like button. We put in a lot of work into these videos, and it really helps. And if you're wondering who I am, my name is Kevin D. I've been trading for 25 years. I'm a full-time trader and working through the second level in the Certified Market Technician program. And if you're wondering why I do this, I work in the investor community. I run it, and we do these videos every single week to try and inform our members what's going on, keep them up to date, and highlight fresh opportunities for them. It's a really cool community. So if you think you'd be a good fit for our community, go check out the link in the description down below. Here's a quick disclaimer before we get into some charts. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. All right, let's do this. So, earnings this week. Big week for earnings. Like I said, mega cap tech companies coming later in the week. But we start off Monday morning with SoFi. I think that will be interesting, really important fintech company, and I know that it's important to a lot of us in the Discord. So that's Monday before the open. And after the close, I don't think any of these companies are terribly interesting. But Tuesday before the open, look at this list. ExxonMobil, UPS, GM, Pfizer, Caterpillar, McDonald's, Spotify. All really interesting companies, important for their sectors and industries. So, Tuesday gives us a good look at what may come the rest of earnings season for a lot of these industries. So that's before the open on Tuesday. After the close, we've got AMD. So that's really important. Tell us what's going on in the chip sector. Also really important for one of the setups we're going to be looking at later on in the video. Snap on Tuesday after the close will also be really interesting. Snap can move markets. I've seen this happen before. Snap has, I can think of a couple times where Snap has warned and really sort of kicked the market in the head. So hopefully that won't be the case this time around. Wednesday before the open, we've got Waste Management. Not usually a market-moving kind of company, but I know that a lot of people have this in their dividend portfolios. So it will be important to a lot of retail investors and a lot of institutional investors as well. Also before the open on Wednesday, we have Peloton. That one's always fun to watch. After the close on Wednesday, we've got Meta, the first of these mega cap tech companies for the week. So that will be really important to watch that one after the close. Before the open on Thursday, we've got Merck. Some other interesting, actually a lot of pharmas on Thursday before the open. Some more energy companies as well, like ConocoPhillips and Shell. But the big day, the big event is Thursday after the close. We have Amazon, Apple, Alphabet. They're all going to report probably within the first 10 minutes after the close. I think actually Apple waits half an hour, but it's going to be really busy right after the close. And then, if that wasn't enough, we've got Ford, QCOM, Starbucks, and Team. Friday before the open, I think the most interesting one here is probably Regeneron. So that's our earnings. Lots going on, of course. I think 950 companies reporting this week. So a very busy week on the earnings front. We also have a very busy week on the macroeconomic side of things as well. Monday, nothing going on. Tuesday, CB consumer confidence. That can and does move markets. But I think that, by Tuesday when this comes out, people are thinking beyond consumer confidence and into Wednesday's FOMC statement, the rate statement, and Jay Powell's press conference. All right, so let's talk a little bit about this. Before the quiet period started, just over a week ago, all these Fed heads, were rolling themselves out, talking up a storm, and a number of them said words to the effect of, I support a 25 basis point rate hike at the next meeting. Well, they don't go out and say that stuff unless it's going to happen. I don't know if you've noticed, but the Fed never surprises the market with their rate hikes. They either do what the market is expecting, and the market is expecting 25 basis points, or they roll out and they tell the market what they're going to do. And that's what they've done, so far, and telling us it's going to be a 25 basis point rate hike. So it's going to be no surprises there. But what everybody's going to be paying attention to, of course, is the rate statement, is the language in there, and what comes next. Now, I think the majority of people are expecting at least one more 25 basis point rate hike. I kind of wonder if we are going to get another one after this. I think there's a half decent chance that we don't. I think they lay off on the rate hikes for a little bit just to see how things are going. It's clear that they're getting inflation under control. We've seen all sorts of data points that show inflation is coming down. If you look at the last CPI and extrapolate the month-on-month number from that, you get inflation running at about 3.6%, well off the highs that we've been seeing. So, knowing that, would you be surprised if they backed off in these rate hikes for a bit? I'm not saying lower rates, because I don't think they're going to do that for a while. But I think they may stop raising rates after this meeting. So it'll be interesting to see what the language in their statement says. All right, so so that is Thursday afternoon, 2:00, I believe, and then the press conference at 2:30. In the morning on Wednesday morning, we have manufacturing PMI. That's an important number, often moves markets. We also have job openings, another important number. So things could get volatile on Wednesday morning with these reports coming out ahead of the FOMC. On Thursday, we have unemployment claims, a couple other lesser important data points as well, but unemployment claims is the big one on Thursday. And then on Friday, we've got the really big one, non-farm payrolls and the services PMI. So both of those are really important numbers. Market watches those very closely. And you know that the Fed watches the employment situation as well. And wants to see how tight the labor market is, and also is watching wage inflation. So lots going on this week on the macro front. So we'll have to pay attention, and it'll give us lots of stuff to evaluate for next weekend in the next weekend's video, and see how things have played out and how things look going forward after that. So right now, I want to take a look at the markets. We'll look at some major indices, we'll look at international markets, we'll look at important commodities, sectors, we'll look at last week's plays, and we'll look at, we've got some nice new setups. There's a ton of really good looking charts out there setting up. A lot of them have earnings coming, so we got to be careful about that. So let's get right into it. Let's take a look at the S&P 500. Here is the SPY ETF. And you can see that we are still making our way up. Now, you can see here that we have clearly broken through and closed above this downtrend line now. We've also closed above the 200-day moving average 1, 2, 3, 4, 5 times. So clearly, we are making progress out of this bear market. We're not out of the woods yet, but we are really making progress. And we're also coming into some resistance here. Now, I wanted to show you, well, so look at, you can see the resistance line. That is quite clear, this blue line here. But I've added a couple of more lines to this chart. And I know it can be a little messy, but just bear with me on this. This purple line right here is the anchored VWAP from the low. Okay? And you can see that acted as, I wish I had put this on the chart before, but that acted as resistance all through this consolidation. And then we even had a couple of pullbacks to it and bounced away from it. Okay, so this is an important line, and this is a line that we should have, at the very least, have this on our S&P 500 chart. And then I've also got another anchored VWAP, this one coming from the all-time high, back here in January 4th, at the beginning of 2022. And you can see that it wasn't terribly important until back at the end of November, where we came up and tagged it. At the same time, we tagged the downtrend line. We pulled back, we came up, we tagged it again. We actually got through the downtrend line. We gapped up through that downtrend line, but we touched this anchored VWAP perfectly and pulled back. And look where we are again. Look where we were on Friday. Tag that anchor VWAP again. So this, causes me some concern. The way we pulled back from tagging that is a little concerning, but I will say I am overall bullish on this market. I was looking at the way crypto is acting over the weekend. There's some risk-on action going on there, so it wouldn't surprise me if we gap up a little bit on Monday. But I am concerned about this, and I'm concerned about, how strongly we pulled back on Friday afternoon. In the last 20 minutes here, we pulled back quite a bit. It's, not terribly surprising considering, it's Friday, before a big eventful week the following week, and a week in which we had, a lot of profits sitting, because we had a pretty decent week here. I'm not sure what we were up on the week. Sorry, bear with me one sec. Where was our close on Friday? Yeah, our previous close there, and okay, yeah, only 2.5%, but still, that's not bad. Again, we shouldn't be surprised to see people taking profits, especially when we're coming into this sort of chart action. So there we go. We are between our anchored VWAPs, off the high, off the low, but we are well above the 200-day moving average. We are still well above the declining that trend line, and above this gap and everything. We've put in higher lows. The one thing we haven't done yet is put in a higher high, and we're almost there. So once we put in the higher high and are looking like we're going to hold that. A few closes above this level, a few closes above that anchored VWAP will make me much happier and much more bullish, even though I am still bullish. All right, let's do the Qs. Okay, you can see the Qs have now closed above. Actually, I better wind this back a little bit. Oops. Oh, and that screws up my. Darn it. Yeah, eSignal's buggy with their anchored VWAP. It's quite annoying because they haven't fixed this. So, although actually I haven't updated eSignal in a while, maybe I should update it and see if they fix that. But what I wanted to point out here is that Qs above the 200-day moving average. We finally got a couple of closes above that 200-day moving average. That's the first close we've had since March of last year, above that 200-day moving average, and first close above the downtrend line. Good stuff happening here. I mean, this looks good. We need these Qs to be strong, and after putting in some higher lows, it looks like we might be putting in a higher high, definitely a higher high close than all of this action over here. Really nice to see that. But we've got to really kind of, prove that we're no longer in a downtrend. We've got to go and attack this high over here. So it's a while before that's going to happen. IWM is looking quite nice as well. We've got this head and shoulders, you could call it a bottom because we're in a long-term downtrend, right? We've got these anchored VWAPs, and you can see IWM has already closed above the anchored VWAPs, closed above the strong resistance level, and is now breaking out above the neckline of that head and shoulders bottom. Really good stuff, or this portends, a good move ahead. Obviously, if this does start to roll over and fail, they say from failed moves come fast moves, so that would not be good. This head and shoulders gives us a target up and around the 207 to 208 level, right where we've got another strong resistance level. So, yeah, I think we're going higher here. Let's take a look at VIX, the volatility index. Now you can see that this is, continues to come down. Had a little pop up here into the apex of that triangle. It broke down out of them. It's pulled down again. Some people are calling this a double bottom. I would say they are incorrect in calling it a double bottom. It is a potential double bottom. There are definitely two lows here, and it did bounce off of that, but this needs to move up and away from here before confirming this is a double bottom. So I'm not concerned about this. We've come down nicely here, and just, one bounce off that level, I don't know, that doesn't count for much in my book. Okay, TNX 10-year yield. This is still sort of consolidating here, but consolidating nearish to the lows. Looks like this could easily roll over, go and attack its 200-day moving average. Boy, it would be nice to see the 10-year yield close below its 200-day moving average, wouldn't it? So that's what I think is probably coming up. But again, this is strongly affected by the FOMC. So that's when we'll see the next big move out of here, I think. Let's take a look at the dollar index. So here's our dollar index. You can see we've been stepping down. The downward momentum is definitely slowing here. We're starting to put in consolidations and, maybe what could be a bottoming pattern. However, I think that if we break down out of here, and again, this is something else that's, can be strongly affected by the FOMC. If we were to break down out of here, I think it takes us down into the 99-cent level. While we're here, let's take a look at our dollar cost averaging system. That is all systems go, and you can see we are now closing above this bright yellow line here is the 10-month moving average. The orange line is a 20-week moving average. So we're closing above the 10-month moving average here on the SPY. Take a look at the Qs. It has closed above its 10-month moving average. Now this 10-month moving average is a favorite with technicians and institutional technicians and traders. That's a really important level for a lot of people. It's it's a bit of a do or die level. So very strong looking action here on these weekly charts in our dollar cost averaging system, and same thing in IWM. Really nice to see. I had mentioned crypto earlier and how this is, quite strong over the weekend. Oops. Bring up Bitcoin, for instance. You can see we're making a nice move, and you can see all of the cryptos making a nice move today. So that's why I think when we open up, when Asian markets open up, I think China opens tonight for the first times because it was closed all last week. This is telling us there's some risk-on behavior going on. We may see that transfer over into equity markets. One thing to be concerned about if you are playing crypto or Bitcoin specifically here is this RSI divergence. Okay, let's move on from this and take a look at our global ETFs. So this is ACWI. This is the all world index. So this is basically represents all global stocks, and you can see that this has moved above that same anchored VWAP line, moved above that quite nicely. Still continuing to grind higher. This ETF includes the U.S. If we look at ACWX, that excludes the U.S. and still looking very strong here. You can see this is much farther above that anchored VWAP off the highs. EFA, Europe, Australasia, and the Far East, developed countries in the Far East, consolidating a little bit here, which is, I think, fine. Probably moving sideways, maybe until we hit this trend line. I'm totally fine with that. I notice this trend line is not quite perfect there. There we go, that's better. And maybe waiting for the FOMC. We also have, I think the European Central Bank is reporting their rates this week as well. Could be on pause here, and we'll hopefully move higher out of there. And I think it will. EEM, Emerging Markets ETF, in a really nice uptrend again. The same sort of thing going on here. EMXC. Remember, EEM has a lot of China in it. This is emerging markets excluding China. And I am still liking the price action in this. I think we're going to start to see some outperformance out of this, the emerging markets excluding China. And speaking of China, here is FXI. This is large cap Chinese stocks, and you can see these are doing very well, still continuing to move higher, easily holding above their 9-day moving average, although coming into a little bit of resistance overhead. Let's take a look at, move on to commodities now and take a look at gold. The gold, the momentum on this up move is slowing. It's starting to consolidate a little bit. That's fine. It's had a really big move. It's allowed to slow and consolidate a little bit. We'll take it silver. Silver's been consolidating for much longer than gold, but it's still hanging out in that consolidation. I think we will now turn off those. We will turn off those lines with the anchored VWAPs. There we go. And let's take a look at copper. Copper continues to step up, but you can see, again, slowing momentum. Some people may not like that price action, may say, hey, maybe this is rolling over. Friday's candle is not ideal, but it did recover from a fairly strong move down. So we're still hanging in there, base on base kind of thing. A little bit on the fence with that one. Let's see. Let's move on to oil. Crude oil is continuing to go sideways, building a base right here at resistance. It's been doing this for a while now. But still hanging out above that 50-day moving average, the 21-day moving average. Basically, it's hanging out above all its moving averages except the 100-day moving average, which seems to be acting as resistance, and then you've got the 200-day moving average overhead. But oil doesn't go sideways for long, so we should expect some volatility out of oil fairly soon, I would think. Look at this is one of the longest sideways moves that we've seen on this chart. All right, let's go to where were we? Oil, gas. This is interesting. This one. Look at that beautiful hammer candle. So we've had this massive move down. And notice in the last couple of days, the last couple of down days, the volume started to slow, and then you get this hammer candle. Now, normally you want to see high volume on a hammer candle. Because you want that hammer candle to be the final capitulation. But I think really what we saw here is all, I just think this move, just these last 2 days, I don't think there was really anybody left to capitulate. I think they had already all capitulated, but there was nobody there to buy it either. Then we get this hammer candle, and then the very next day we get this nice big green candle. Now, it came right up into a resistance level, so we've got to see that continue on Monday with nat gas moving higher. But it's possible this is a bottom. It looks very, very bottomish to me. But I'd really like to see a nice V bottom here. I would like to see us continue higher, at least up until the 360 level. And it'd be really nice if it just got through a little bit and then did a consolidation up in here, between 360 and $4. That's where I'd like to see a consolidation out there. I'd like to see a really strong recovery over the next couple of days. XLE, our energy ETF, it is right up at all-time highs. Just chilling out for a couple of days now under that level. That's what we want to see. After it's made a little bit of move, we want to see it chill out under there and then burst through it. Our oil explorers and production companies. Similar price action here, not at all-time highs yet, but same sort of thing. Hanging it under resistance a little bit, maybe getting ready for a nice strong move higher. And the oil services ETF, same idea, also right near all-time highs. Not quite as clean, looking a little more volatile up there. Anytime you get a little kind of volatile up at all-time highs, it is cause for concern. But considering the other ETFs in this sector are looking pretty good, we'll forgive this for being a little more volatile. Okay, where to next? Oh, I'll show you just a couple of the oil companies. ExxonMobil, it did break out to all-time highs, but it failed to follow through on Friday. So you had this nice strong candle on the breakout here, and then you drew an inside day on Friday. I'm sure everybody knows what an inside day. Inside day is where all of the price action from this candle would be inside of the body of the previous day's candle. That's not terribly bullish. Wouldn't surprise me if we saw, another down day here, maybe come and test this breakout level and then move higher. And if you're so inclined to, if you want to get in on this move, that's a totally valid entry for you. When it pulls back, test that breakout level, and then when it starts to move away from it, you've got to start watching the intraday price action as it starts to move away from there, and that's when you enter. Much like I did on HIMS, for anybody who was watching how I played HIMS. The other one. So yeah, that's what ExxonMobil is doing. Now Oxy, on the other hand, still in our building this base on base pattern that it had. Some weird price action going on in here though, right? You tried to break out of that base, failed instantly, and then the following day gapped way down. So it closed here, right? Gapped way down to here, and then went way up, pulled back again. Just really messy price action in there. The day after that, had kind of a hammer candle, and it's gone up. And look what we get. We get, as soon as we try and break out again in this, we get another identical looking candle to the one on that previous breakout attempt. So I don't know what to make of this. If you're going to be playing this, I mean, it looks like it's going to go. To me, because it found buyers down here, where it should have found buyers, and a lot of buyers. So I'd be really surprised if it doesn't move higher, but I think people are going to be really tentative about this. It may have to have another down day, and maybe it's got to go sideways for a few more days before it can really actually break out. So yeah, if you're playing with that, be really careful there. All right, 10, a little bit choppy, kind of sideways. Nothing to be worried about here, but nothing to really write home about either. For solar, that one is moving higher. This is, still the leader in this sector by far. It took the leadership away from Enphase, which is still not looking good. We're not even going to look at that chart. But you can see this is making a move, looking to attack that all-time high. Canadian solar. Canadian solar has chilled out a little bit over the last week. But it's drawing this nice bull flag. We expect to see this break to the upside here. When it does break to the upside, I think it moves up into this area where I've drawn this box here. So that would be up around there. Probably moves up into there, consolidates a little bit before, probably breaking higher. But we're getting a little ahead of ourselves. First thing we got to do is break out of this pattern, right? Okay, let's move on to some of the other sectors. Consumer discretionary, huge outperformer on Friday. Consumer discretionary outperformed the S&P 500 by 2% on Friday. And you can see it's had a very strong week. So really nice to see that. Consumer discretionary is more of a risk-on kind of sector. So when we're seeing strong outperformance in a risk-on sector, that's very bullish. Now, cause for concern here, little red flags maybe. We are coming to a resistance level and stalled, and also stalled right at a declining 200-day moving average. Little bit of a red flag. Maybe it means we've got to go sideways a little bit before moving higher, and that'd be just fine. A couple of sideways days, no problem at all, because that will let us build some strength to move higher, and that would also put us into Wednesday. So maybe Wednesday is when we get the breakout from here. However, if markets are up tomorrow, like I kind of think they're going to be, this will break out and move through here. In which case, then we've got to be kind of the rest of the week watching out for a pullback. Let's look at industrials. So industrials had kind of, they'd had a bit of a pullback. They consolidated a little bit, and they seem to be trying to move higher again. This is not a sector I expect to be leading right now, because I think we're all focused on tech. So that it's putting in a bunch of green bars is pretty healthy, and we should maybe not take our eyes off this sector and some of the stocks in it, because it is still looking pretty good when all the attention's on tech. Financials are pretty interesting here. We're strong resistance and trying to break out of that right now. Be really nice if it did move away from this level, or even if it came up and tagged this other $37 minor resistance level, came back, retest the major resistance level, and then move higher again. All that kind of price action would be good. What I don't want to see is I don't want to see it move down below this major former resistance line, which is now support. Moving on, getting into the fun stuff. All right, let's look at technology. Look at this. We are now closing above all of the downtrend lines. We haven't made a higher high yet, but we're very close. We are into that gap. We have almost filled this gap. Can we get out and through that gap and start putting in highs? Yes, I think we can, but don't forget mega cap tech earnings this week. Communication sector. Same sort of thing going on here, breaking through all those trend lines, breaking through the declining 200-day moving average, closing above it, moving into the gap, filling it, and looking like it wants to go higher. Let's look at our a lot of the stocks that are in those or lead those sectors, our FAANG Plus type stocks. This one is Meta. You can see it stalled on Friday right at the declining 200-day moving average and below this major resistance level. Wouldn't surprise me if this consolidates under here with earnings coming up. I think it was on Wednesday after the close, right, for Meta? I'd be surprised if we move much higher, unless, we start hearing rumors out of the company about earnings or something like that. Apple, look at this move in Apple. I was a little surprised. I thought that Apple would be going sideways. You can see where I thought Apple would consolidate down in here, right? It moved through that level quite quickly, and it just keeps leveling up here. But we've got earnings, coming later in this week. So again, wouldn't surprise me to see this move sideways a bit under the 200-day moving average. Amazon. Another one with decent moves. Nice, healthy action, right? So we had that bull flag, and it broke out the top of the bull flag. It has moved into the, or stalled out right at that gap. Not too surprising. Be nice to see move into the gap. It should be able to get more momentum, I think. See, the problem with this flag here, it broke. Look at this day. This one day we had moved from the bottom of the flag all the way to the top of the flag, and then the day after it broke out. It would have been nice if it had, that day had been inside and then it broke out. So maybe we're going to stall here and move sideways for a little bit before attacking the gap and then getting, through the gap. And this one has earnings coming up on Thursday. Netflix, kind of seeing a bit of a loss of momentum here. Not too surprising because I think some of the other tech leaders are getting more attention than Netflix is getting right now. I mean, it got some attention on its earnings, but it's kind of made the move, and some of these other companies have their day in the spotlight coming up. Google, I'm just not terribly impressed with Google's price action here. I mean, we have a nice rounding bottom. It's put in a higher low here. We got to put in a higher high. This price action just seems a little choppy and kind of tepid for my liking. Microsoft. So Microsoft had earnings last week, and you remember there was a big gap down. So here was the earnings day, right? It had earnings after the close on that day. So the following day, gap down, went lower, and then bounced right off of that pivot, which was really interesting to see. And continued higher, and has continued higher since. The momentum on that has stalled a little bit right here, right under resistance at $250. Not surprising. Those were 2 big days after a big sort of fundamental change in the company. They bought that up. So probably see some sideways action before breaking higher. Tesla, wow, man, did I ever get this one wrong? I'm really surprised, and it's just like the acceleration in here. See, it seems to me now, I mean, we're getting into short covering type price action. We're getting into kind of euphoric price action. If you're buying it up here, you're doing it wrong. We're coming in as some major resistance. We've had a really good run. I think this has got it. This needs to take a break. And I think best case scenario here, this goes sideways for a little bit, and then you can look for some more upside action. But this is getting too steep, too euphoric. I would watch out in here. And if you're playing this on the short term, I think you've really got to start thinking about taking some profits off the table here. Of course, all of that being said, I was although when I got bearish on Tesla, you got to remember it was here, right? So I was right, but I continued to be bearish, and that's where it started to go wrong, was continuing to be bearish. Because this has made a strong recovery, and it has showed us that people will come in and buy this thing. So I think that really the level that we got to watch on any sort of pullback, I think this 135 is going to be, moving forward, a strong support level. And I'm not saying it's pulling back to there anytime soon, but I wouldn't be surprised to see consolidation or a bit of a pullback soon. All right, semiconductors. These are quietly starting to move higher, I think. I like this little price action right here. You had a move up. You had a little bit of a kind of a 2-day pullback, but strong, right? Closing nicely here. After this gap down, and move right back up, and then broke out above those two, and now you've got this kind of thing going on. Now, I wouldn't be surprised if we went sideways a little bit, build a little bit of a base, but I would be watching the top of this base here. It's hard to call it a base when it's only 2 days long, but you know what I mean. I'd be watching these highs because I think when this moves out of here, I think it can make a nice move. And if you take a look at some stocks like AMD, we're not going to look at AMD right now, but if you look at AMD and you look at one of the ones, you look at AMAT, which we're going to be highlighting a little coming up quite soon in this video, because I think there's a really nice setup there. I think it's nicer than AMD's. But, maybe compare it to, and also AMD's got earnings, I can't remember which day, early in the week, I believe it was. So that's why I kind of like AMAT. And I think, AMAT could be a really good play off of AMD's earnings. All right, let's look at healthcare. Actually, nothing going on in healthcare, blah. But biotech looks ready to make a move here. We came out of that little downward sloping pattern, came out of there, and now we're consolidating under those highs. I think this is ready to move higher. Certainly move up to this 95 level. So if you're looking at any biotech stocks, keep an eye on this ETF or IBB. And if this breaks out, it might be a good time to take some of those biotech plays, if there's any good setups there. Nothing really going on in the defensive sectors, which should be no surprise to anybody. Let's take a look at some of our plays from the last week or two. So we'll start with HIMS. Okay, as you know, I have been looking for a pullback. After this broke out of here, I thought, this is going to come and pull back and test. And sure enough, it did. I thought maybe we'd pull back even farther. But at the very least, I thought we would pull back to that former resistance level. It bounced really nicely off of there. I bought on this day right here, early in the day, when I started to see, I was watching the intraday price action, right? I was watching the low of that candle. And once we got above the low of that candle, that's where I went in, because the intraday chart was saying, yeah, it's a buy here. Bought it, did not like the way that pulled back on those 2 days. That was Tuesday, Wednesday, and now we're moving up again, which is good. So I'm going to be watching out for this pair of highs. But I think this price action in here is telling us that, yeah, it is wanting to move higher. Maybe it has to consolidate for a couple of days under there, but we haven't had much of a move here, so I think it can get some momentum and just blast right through that level. So that was HIMS. Now another one, Birchcliff Energy. This one I'm disappointed with. I bought this one on the breakout here. And this one's more of an investment for me. I really like the fundamentals on this company. I like what the management's doing, and I really like the dividend. This got whacked with gas. Remember that gas on those days. Look at that big move down in that gas. This Birchcliff does have a lot of gas properties. And I've lost it. There it is. So that's why that pulled back like that. But we do have a nice looking hammer candle here. Unfortunately, it was followed by another red day. But I think that I'm expecting oil to move up, and nat gas itself looks like it'll move up. So I'm expecting this to make the turn and move up. If this doesn't, so if I were just swing trading this, I would definitely be now drawing a line in the sand right around here. You can see you've got these highs here. You've got this low that's now below that line a little bit. I would probably stop myself out below here. I might wait for a close below there. Now, as an investment, I'm probably looking at this swing low, which makes me look back, look left on the chart, look at all these lows here and this price action here. Probably want to draw in a major support level off of those. So, I'd probably be looking at, if I saw a couple of closes below, let's say this $8 level, and it's just, let's move this down to $8 even. If I saw a couple of closes below that, then I'd really have to consider getting out of this. I'd have to think, reconsider my thesis, think that I'm wrong, and get out and maybe look for a re-entry. Because I think what happens if we break below this level, I think we come down to here fairly quickly. There hasn't been a lot of price action in that area. When we probably come down into the $7.25 area. Maybe here, what is that? Yeah, that's around $7.20, $7.25. That's where we would probably come down to if we break through here. So that's my thinking as an investor. If we break this level, I'm wrong on this investment. Okay, Las Vegas Sands. So I mentioned this one last week. Now, I don't know if you guys have noticed that breakouts are working. Buying the gap, a gap up, has been working. It's so hard to do, especially after the last year we've had. But we've got to get out of that mindset that we've got ourselves in. That mindset was good and defensive, and it served us well over the last year. But had you bought the gap, well, you would have taken some heat. You probably would have stopped yourself out, but it would have been all right. You would have been able to catch some of the move up, and I think there's going to be more move up here, although we are coming into resistance. Yeah, it's unfortunate when they gap like this because it is very hard to buy that gap. MRVL was another one with similar price action. We were looking for, and this is the gap here that I'm talking about, right? We were looking at this consolidate, or sorry, no, that's not the gap I was talking about. I was looking at this hammer, and I was thinking that, you could buy this hammer, and then you've got this downtrend line, we moved above that, and then you had another gap in here. I think we had good price action here that hopefully somebody got to participate in. All right, let's move on to some of our new setups for this week. And when we're looking at these setups, we've got to be aware of the macro kind of week we have, right? When we're looking at these plays, let's not forget FOMC, jobs reports later in the week, the non-farm payrolls, but primarily the FOMC and our mega cap tech earnings that we've got coming up. All that plays into this. But for AMAT specifically, we've got time here, I think, till earnings. Earnings on February 16th. So just over 2 weeks away. That gives time for this play. But you also have to watch out for AMD's earnings. So AMD has earnings on Tuesday. I think it's Tuesday after the close. So you might want to hold off on AMAT until after you see AMD's earnings. But this is the kind of thing that you might want to play this in the after hours. When you're watching AMD's earnings and buy or sell whatever you're going to do with it, buy or sell in the after hours. Because I think we're going to continue to consolidate. I'm not going to buy a breakout here on if a breakout happens on Monday. I'm not going to buy that, knowing that AMD's earnings are coming and are no doubt going to affect this stock. So you know what to do, right? You either buy the breakout or you sell the breakdown. This is a really binary trade here. Carnival Cruise Lines. So the airlines have been doing pretty good. And Carnival's Cruise Lines has now come into this resistance level yet again, and it's unlike other times, it's coming here slowly. Okay, so let's look at this here. We've got this resistance level. We've come in here, once, maybe twice. You could call that 2, 3, 4, 5, 6, 7, 8, 9, 10. Now the 11th time it's come into this level. The more times we come into here, the weaker the sellers are getting, the stronger the buyers are getting. Especially when we move into this slowly, we consolidate under here. Look at these other times you come in here. Big, strong move into it. Yeah, of course it's going to fail. Big, strong move into it. Yeah, it fails, right? It's expended all its energy moving into that level. But now, it hasn't over the last week and a half. It hasn't expended much energy coming into that level. So I think we're easily going to see a breakout out of here. If the market's up on Monday, if the market's gapping up on Monday, this is probably gapping up through here, and this would be a gap that I'm going to hold my nose and buy, I guess. I hate buying the gaps like that, especially on these kind of breakouts, but I probably will. But I'm going to be really careful, too, with the stop, and I'm going to be trying to take a little bit of profit off as soon as I can, really quickly. Another one that I think, was this similar? Yeah, this one's really similar to that as well, is Caesars Entertainment. And as you may or may not know, they have a lot of properties in Macau. And Macau, China. China reopening, good for this company. And look at this head and shoulders bottom here. So you can see the downtrend, which we have broken through. Beautiful head and shoulders here. We've got a bit of a resistance zone, and we're right there ready to break out. And we've got a really nice target on here. We've got some resistance along the way to get to that target. $60 here is a no-brainer resistance. $82 is a little bit of resistance there, and then you've got this pivot. And I think this pivot is just above that target from the head and shoulders. Yeah, you've got some spots along the way. Your first profit target is the 60 level, right? I would definitely take at least a third of this position off there. Probably consolidates there, and then if you break out of there after a nice tight consolidation, well, you could add it back in. But I would certainly almost have a resting order sitting at 67.85 or something like that. And just take a chunk of the position off. But this is a really nice setup. I really like this, and this is the kind of trade I'm going to want to try and be in for a little while. This is the sort of swing trade that you could be in for months rather than just days. So again, watching this one very closely. DraftKings. I've talked about this one quite a bit, right? We've talked about this one to the short side. Talked about how every time it comes up and touches that 200-day moving average and that downtrend line, that it pulls back every single time. And you can see it did it again. Well, the last time it came up and touched 200-day moving average, it had broken through the downtrend line. But still, it touched a 200-day moving average. You see the 100-day moving average is there as well. It pulled back, but it found support at that downtrend line, found support at the 50-day moving average, the 9-day moving average, and didn't even get down to the 21-day moving average, and moved up again. And now it's had a couple of closes above the 200-day moving average, and this to me looks to go higher. I'm not totally thrilled about this setup because we've got kind of big volatile candles, right? So it's not a low risk setup. So this is something you would want to play small, but you either just buy a move above Friday's close or Friday's high, or you'll wait until this line here because that's potentially resistance, and maybe wait and see if we get a little bit of a consolidation there for a couple of days and then buy a breakout out of there. But again, this is a volatile stock, and it could easily move right through this and leave you behind. Just play this one small. It's definitely got some risk in it. And finally, speaking of risk, we've got this little penny stock biotech. But it's technically acting really well. It's well behaved here. So you can see coming off a bottom, you made a bottom. You could argue. Well, take a look at this thing. It's been in a downtrend for a long time. It had a giant base here. IPOs goes down, put in a giant base, broke down out of the base. So if this thing is running up, you got to watch out for all this overhead here. And in fact, I should probably just, what I'm going to do actually? I'm going to draw this in this way. Draw that in something like that. I want a great big border, great big shaded area on that, because it's a massive resistance zone. But if this thing gets going, it's got hardly any short interest, which is kind of surprising. I hear that a lot of smart people like this stock, even though it's a penny stock. So we move up, we have a nice bull flag, we move up out of that, we consolidate. It's not the cleanest looking bull flag here, but look at this. If this breaks through here, it probably makes a quick move. Now, it might have some trouble at this 79 level, but you get through that, and then you start making a quick move, and then it's really going to start attracting attention, I think. I think the volume will come up, it attracts attention, and it can easily get through these levels and make a run up into perhaps in this 185 area, and then beyond that you're looking up into around 250, 260. This could go fast, this thing. But again, very risky. It can go down just as fast. If they have, bad news comes out of the FDA or something, because this is a biotech, it could easily lose, half its value, even more, overnight. Maybe even come down to these lows at 30 cents. So play it small. But this is one for anybody who likes to put on a little bit of risk, likes to see a little bit of excitement. This could be a good play for you, but this is, of course, none of this is investment advice. You trade at your own risk. Okay, that is all the charts we're going to look at. What have we got coming up this week? This is January's calendar still, but there will be no ticker talk on Wednesday. I'm going to be taking the Wednesday off here. But there will be a weekend video the following weekend, as always on Sundays. And those ticker talks, when they do happen, members get to attend live. So go check out the link below and come join us in the Discord. Thanks for watching, everybody. Don't forget to like, share, and subscribe. And if you've made it this far, you guys are the real stars. Thank you so much.